Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, hello, good morning. Good morning, everyone. Hello, Meza, how are you? All right, so let's get to it. Guys, I'm going to keep this one short. Unfortunately, I'm not feeling well again. So I'm going to keep this short and clear. So as always, let me start with the weekly high impact news calendar. Sharing my screen in a second. Okay, there it is. Trying to share my screen. Yep, there it is. Okay, so let's get to it, guys. First of all, we start with Tuesday because today, which is Monday, we have nothing of high impact. So this week, it's safe to say that it's the week of central banks because we have many central bank meetings and interest rate decisions coming up this week. So we start on Tuesday with the Reserve Bank of Australia interest rate decision. The previous was 3.85%, and the forecast is a hike of 25 basis points to 4.1%. So we'll check. Remind me to check the AUD USD chart after we finish with the calendar, and let's align both. Thank you very much. Thank you, Meza. Okay, so that's it for Tuesday. We only have the interest rate decision coming from Australia or the Central Bank of Australia. Then we move to Wednesday. Wednesday, we have a big day. We have the CPI coming from Europe and the PPI coming from the US, and the rest of them, I think, are monetary policy related. So the CPI in Europe is expected to stay the same, 1.9, which is like slightly below their target, but it's still within the same range. The PPI in the US is expected to tick lower. So it was 0.5%. The forecast is 0.3%. If it comes in lower than this would be negative. But to be honest, at this point, nothing is going to be negative on the USD because it has broken some important levels to the upside due to the ongoing war in Iran. So yeah, that's that. Then we have the Bank of Canada interest rate decision. That's another central bank. We have the Bank of Canada. They're not going to change. The previous is 2.25%. The forecast is still or is going to remain 2.25%. The markets are not expecting that the Bank of Canada is going to cut rates or raise rates. So the forecast is unchanged. Then we have the crude oil inventories. The previous was a slight buildup of 3.824 million barrels in the inventories. No forecast number, of course. We're waiting for the actual number. Then the US, then the rest of the session is going to be all about the US numbers. We have the Fed interest rate decision, which is expected to stay the same. They're expected to hold rates steady at 3.75% with no rate cuts, as Trump wants. Trump wants cuts, but they're not going to cut rates. Then we have the FOMC economic projections. So we're going to see what the FOMC members think of the future path of the interest rates in the US. They're going to release something called the dot plot, which is basically a table or a chart that shows the expectations of the Fed members of where the interest rates are going to be in the next, like in this year, next year, and 3 years from now, and even longer. So this is very important. It gives the market an idea of where the interest rate path is going. Then, of course, we have the FOMC statement and the press conference, which will hold the most um, volatility. We will see the most volatility around this time, which is the FOMC press conference. This is one of the like last 3 or 4 meetings or like press conferences led by Jerome Powell, because he's going to end his term by May. So this is one of the few last press conferences he's going to lead. So markets usually swing high, with high volatility during press conferences. So um my advice would be wait for Jerome Powell to finish speaking, try to understand what he has to say, and then you can enter the market. But avoid trading during his speech. All right. Hello, Uni Soccer. Hello. All right. So that's it for Wednesday. Then we have Thursday. We have the Bank of Japan interest rate decision. Again, another central bank. So the previous is 0.75%. The forecast is 0.75%, meaning they're going to hold, or they are expected to hold rates steady at 0.75 with no change. Next, we have the Swiss National Bank interest rate decision, which is the central bank in Switzerland. The previous is 0%. They're now at 0%. And the forecast is no change at 0%. So they're not expecting to raise rates or cut rates. Now we have the UK, or the Bank of England interest rate decision. The previous is 3.75%. The forecast is also 3.75%. So also no change. So let's recap now. Like talking of central banks, we have, like, most of them are not going to change, but only the Australian central bank is expected to change. All right. So let's see how that goes. But for now, most of them, even the ECB here, if you look at the ECB interest rate decision, the previous is 2.15%. The forecast is 2.15% as well. So they're not expected to cut rates or raise rates in this meeting. So yeah, the Swiss National Bank, the Bank of England, the European Central Bank, the Fed, the Bank of Japan, all of the central banks are expected to hold rates steady. Especially, and that's how, like, markets connect. Especially that we have a war going on now. It's not. It makes the job more tricky. With the closure of the Strait of Hormuz, the global supply chain is disrupted now. So and of course, energy supply chain is disrupted. So we're facing two problems: supply chain and energy, and increasing energy prices. So this might reignite inflation again, and this, like, would eventually affect monetary policies around the world. That's why it makes sense that most of the central banks are holding rates steady. It's the wisest thing to do, which is they need to sit on their hands with no action taken. All right. So next finally we have the new home sales, and that is it for the economic calendar. It's expected to be slightly less than the previous reading. But as for the economic calendar, that is it. I think let's move to the charts. If you have, let me check questions first. Is there any fundamental reason or great reason that Swiss have 0% cut rates? Okay. Is it due to Swiss greater stability? This is number one, yes. But the main reason, Mesa, is because Switzerland was the first country or the first economy to beat inflation. So back in 2024, I think it was 2024. By mid 2024, they officially reached their 2% target of inflation, while we're now in 2026, and most of the economies are still fighting to reach the 2% target. So that's why they started early. They won the battle against inflation, and they started cutting rates again as they saw suitable. So that's number one. And by the way, like almost all central banks are still fighting inflation, except for uh, the Swiss National Bank and the ECB, which is the European Central Bank. Both of those are uh, already won their inflation battle, but the difference is why we see 0% in Switzerland, but not 0% in still 2.15% in Europe, is because Europe just got there. But Switzerland have been there for the past 2 years. So it takes time to drop rates gradually to make sure that nothing would backfire and no bad consequences might happen or like because of cutting rates too soon. So yeah, that's it. All right, let's now move to the charts. Okay, there it is. All right, so that's the trying to share my screen, guys. Umayma, thank you, thank you. All right, so 1 second. All right, all right. Okay, so let's start with the DXY as usual. Very, very bullish. So, for those of you who have not been following our analysis, the DXY has been trending up for the past 18 years now. So, we're waiting for a break above this level, and we got that on the weekend. We broke above 100.5 and we closed above. That's a very bullish sign in the path of DXY. Okay, so on the daily, we can obviously see that um, these can be deleted now. We don't need them anymore. We broke above, and now we're trending upwards. We're seeing higher highs, higher lows, but this is a small wave. I still need to see something that looks like this, for example. Yeah, so I want bigger waves and bigger or like more important or higher time frame uh, tops and bottoms before we can draw like a proper trend line. Okay, but for now the current trend line or the current wave is trending upwards, which shows great strength. So we might not even like get this big correction. We might just continue going up. As we saw here, it just went down. And if you look here, it just went up with a steep slope. If you can look here, if you see here, it can just like if it's going to replicate this, for example, we would not see anything below 99 anytime soon. All right. So what does that mean, guys? What does that mean? What does this analysis imply? It implies that everything against the USD is going to weaken. So let's now move to everything against the USD. We start with the Euro USD, which is trending downwards. All right. So yeah, there it is. We had a very bearish close last week. Um, we closed at like just above 1.14, and now we're expected to, like, we have this level, which is 1.1385. Once we break this, we're going to see the next level, which is 1.1150, 1.12. So it will start dropping faster and faster. Okay, so for now, it's still um, very bearish. It makes sense because the XY is very bullish, right? Now, for now, we have this trend line. If we go back up to retest the 1.16, 1.1650, I would give my trade another chance, and I would sell again at 1.60, 1650, sorry, with my stops maybe above 1.17, or most likely, if I want to be safe, I'm going to place it above 1.1840. Okay, so for now, I'm waiting for a retest, but I think the drop in Euro USD is confirmed, just as the um, the reversal to the upside in the XY is also confirmed. And when I say confirmed, I don't mean that it's going to be guaranteed. Uh, when I say confirmed, I say technically confirmed. Okay, just to be safe, and just to avoid any confusion on your side. Um, how do you spot or see pivot points on market structure? I want to develop this ability. Any advice? Well, it comes with experience. This is number one, but it's pretty simple. I want you to look at it this way. For example, if now we're trending downwards, okay, like this here, we're trending. We're making lower highs and lower lows, right? What happens if we break the previous high or the previous high? This invalidates the downtrend, correct? So yeah, that's how I know that this is an important structure point, which is 1.1840, 1.1850. I know this is an important structure point, and on the other hand, if you look from this side, it was trending upwards, right? And then we reached this level after a sharp drop, and then we made a new high. So this basically, if you want to look at it, you need to zoom out a little bit and do this. So we're basically, it looks something like this. And by the way, this my students usually, like, I tell them to draw the waves. Okay, so now this is considered a wave. This is also considered a wave. This is also considered a wave. Okay, so if you look at it, each top is higher than the previous top, and each bottom is higher than the previous bottom. So we have higher highs and higher lows. Of course, as we reached here, we lost momentum, and it became slower. So this was the first level to break, which is the first what's it called? The first bottom, or the first higher low. Okay, so this is the first invalidation point as I told you now, technically we're confirming, or it's confirmed that we're going to drop. Why? Because we closed below this. But what's the next level here? The next level is going to be this low. So what's going to be the next level? It's going to be this low. So you see where I have my red lines drawn? It's not random. It's because those are previous lows, and they're going to act as support at some point. Okay. So yeah, and my advice is to draw waves until your eye catches them without drawing. Okay. And I think that is it for Euro. Do you guys have any more questions? Okay. Yeah, I'm going to be waiting for a correction, maybe around the 1.1650, or maybe a little bit above. But yeah, this would be a great um, place for me. Yeah, even 16 is like 16 flat, 16, 24, 25 is also good. We'll have to wait and see. All right, so that's it for Euro. We move to GBP USD. Real quick, also closed very bearish last week. The daily, very bearish. And we have nothing to hold it here. So we might continue dropping all the way toward the 1.3 level. Once we break 1.3, then we open to another structure point, which is 1.27. Once we break 1.27 Mesa, we're going to move to the next lower or like the previous bottom. Okay. So yeah, that's it for GBP. It's basically the same. Let's take a look at USD JPY, since USD is like climbing and is making new highs. It only makes sense that we see that USD JPY is making new highs. But the catch here is every time the USD JPY reaches 1.60 or not 1.60, 160 and above, so 160 yens against for each dollar. So every time it reaches 160, 161, the Japanese government and the Japanese central bank intervenes in the exchange rate and brings it down. So what they do is they go in and they buy a lot of Japanese yen, so that they like withdraw some liquidity from the market. So the supply of yens becomes less, so it becomes stronger. It becomes like more scarce. So this scarcity creates value. So it becomes the demand doesn't change, but the supply drops sharply. That's how they control the exchange rate. So let's watch and see, but I expect to see an intervention soon by the Japanese central bank once it reaches harmful levels for Japan. Okay. And when I say harmful, I mean harmful for the international trade. Okay. And the term you use, floor and ceiling, does it mean support and resistance? Yes, means yes. Okay. So done with JPY. USD JPY is still very bullish. We might see a slight correction to this short-term trend line, which is this. So we might see a correction toward 185, 158, sorry, 158.5 before continuing, or 158.25 before continuing upwards. So yeah, keep that in mind if you're trading USD JPY. Now let's just cross-check with AUD USD. They're expecting to, or they're expected, the Reserve Bank of Australia is expected to hike or increase rates by 25 basis points. And to be honest, if you take a look here, we've been in a downtrend since 2011, and very recently, one second, let me fix this. Okay, so I don't want this anyway. Very recently, we saw a break above this trend line. And once we broke above zero point 0.7, which is like not zero point 0.7, 0.695, once we broke above this, we turned into a bullish or an uptrend, bullish trend or uptrend. So now I'm expecting to see higher prices on ADSD, which also aligns with their fundamental story of raising rates because of inflation, of course, and tariffs. So it makes sense that they're going to, like, it aligns. AD technically is expected to go up. And what are they doing? They are hiking rates or increasing rates. So both align. So if you're going to trade ADSD, make sure you look for buys, not sells. Okay. Finally, let's move to gold. Before gold, let's look at oil. Okay, so this was a great place to buy from, which is 75. Last week, it gave a great opportunity to buy last Tuesday, but then it continued like climbing up. I'm expecting to see, let's go 8 hours. Yeah, I'm expecting to see 125 very soon. Yeah, so the next target here for this uptrend is going to be 125. Yeah, but you need to pay attention to something, that volatility and like volatility in oil is very strong and very high currently, that it moves like 2% in an hour. So you need to pay attention to that, because it might harm you if you decide that, yeah, we know it's going to 125. Why not buy from now? Simply because your closest stop loss is 700 pips away. So if you're going to enter this trade, no problem, but make sure you size down and trade or calculate your risk before you enter that trade. Okay. Finally, we move to gold. So yeah, gold almost closed very bearish, but it closed bearish last week. I wanted gold to close below 5,000 to confirm the correction, but we are still we might just like get to 4,900, 4,930, and then we might continue going up from there. Or my theory would be correct, that we're still in the big correction, and we might see a correction downwards toward the 3,800 level. So it's either this trend line holds the gold. Okay, so we have this trend line, this black line. It's either it holds above this trend line. If not, if it breaks below, we're going to retest this trend line, which is going to hold gold above it. So we have two slopes or two speed lines in gold. The first one is close by. So the pivot point here is going to be 4,850, which is this level, this area here. Okay, this low is not to be broken or like properly penetrated. Like it's like it shouldn't be broken and closed below. So this is the first level. Without breaking and closing below 4,850, it could continue going up. But if it does close below 850, we might see the 4,400 again, and then the 4,000, and very possibly we might see the 3,800 level, which is this area. Okay, let's wait and see. That's still too early to decide, but to confirm the drop and to confirm the big correction, which looks like this. One second. Yeah, it could look something like this or extend a little bit more to this area, maybe. Okay. Yeah, so that's it for gold. Uh, Finally, silver. Silver might like show us something different. Since it broke this, we might be heading towards this area, which is 63, 60 something. Yeah, it could be this or this. One second. Yeah, so no need for this one. We might be heading toward this level, okay, which which is not very far from here. So the which would make the 64 the pivot point, or we might be retesting this trend line, which is in the 50s, and we might reverse from there. If I see silver or like in its 50s, I'm going to buy for 100% without thinking twice. Um, all right, so I think that's it for today. I hope it was helpful. I hope I answered your questions, and um, I cleared any what's it called, any confusions you had um, regarding the week ahead. So yeah, good luck trading next week, guys. By the way, Bitcoin is reversing to the upside. It didn't reach my level, which I was interested to buy from. So yeah, I think it's reversing to the upside, but it still hasn't confirmed the reversal. So yeah, anyway, good luck trading next week, guys. Oh, 1 second, we have a question. What do you think of the gold weekly bearish engulfing candle? Is it an engulfing candle? I don't think so, no. It's not an engulfing candle. It was going to close as engulfing last week, not last week, the week before, which is this candle, but it couldn't close below 5,070. It couldn't. So yeah, this week we closed below 5,070, but it does not look like engulfing. Engulfing should look something like this. It should eat or engulf the previous candle. All right, guys. So yeah, that's it. That's it for today. Let's call it a session. Um, if you have any questions, you know where to find me. Good luck trading next week. Be careful of yourself. Be careful trading and take care of yourselves. And just a reminder, on Wednesday, it's going to be very high volatility during the press conference or like the Fed press conference. So make sure you don't have any trades running by then if you're day trading, and make sure you avoid entering new trades while Jerome Powell is speaking. So again, take care of yourselves, and I'll see you on the next one. Bye bye.